Okay, we continue again on locational break-even analysis. So for break-even analysis, what we need to do or what we need to remember is total revenue minus total cost is equal to zero, meaning that we are not facing loss and we are not gaining any profit. So BEP is break-even point, can be calculated using this formula, which is fixed cost divided by selling price minus variable cost. Okay, so what is fixed cost? Fixed cost, examples of a fixed cost is you pay for rental. So every month you pay fixed amount, 200 ringgit per month, 200 ringgit per next month. And variable cost is cost that vary whenever you have additional in your production. For example, next month during Hari Raya, so you need to add more product or add more material. Therefore, you need to pay for overtime. You need to pay for extra material. That is variable cost, cost that vary or cost that changes. Okay, so from that we can calculate the profit. Profit from total revenue minus total cost. So in total revenue, we have selling price times or multiply with Q is quantity. Okay, then minus with the total cost. Total cost comes from fixed cost plus total variable cost. Okay, and total variable cost, as you can see here, total variable cost comes from VC. VC is variable cost times or multiply with quantity. Q stands for quantity. So for break even, we have to remember break even is where profit is zero or where total revenue minus total cost equal to zero. Okay, let's take an example here. We have a firm is operating with a fixed cost with 5,000 ringgit per month and the variable cost is 25 ringgit per unit, and selling price is 35 ringgit per unit. So the first question, find the break-even point. So break-even point is where the point you are not gaining loss or profit. So profit equal to zero, or revenue is your income minus with the cost equal to zero. So how to calculate BEP here? So fixed cost divide by selling price minus variable cost. So in this case, we have 5,000 divide by 35 ringgit and minus with the variable cost 25 ringgit. So here we have 500 units for break-even point. Break-even point here where you are not lost and you are not gaining profits. Okay, so how the other way to determine the break-even is where we want to test total revenue equal to total cost and equal to zero, meaning that you don't have profits and you don't have loss. Okay, so total revenue comes from selling price times with quantity equal to fixed cost plus total variable cost. So in our case, we assume that we do not know how much the quantity. So 35 is our selling price. 35Q times with the fixed cost plus the variable cost, and also quantity we consider it, we don't know the quantity, so we use Q. Okay, at the end we have 500 units. Right, that is for that proof that total revenue minus or equal to total cost or equal to zero at 500 units. Okay, so how we want to prove profit? Profit equal to total revenue minus total cost. So again, for total revenue, we have selling price times with quantity minus by fixed cost plus total variable cost. And here we can prove that profit is equal to 0, where we replace the quantity with this 500 units. What we can say that here, um, the BEP, if the sales volume is less than 500, so the firm will incur losses. And if it's greater than BEP is greater than 500 units, then you will make profits. The company will make profits.